Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Monday, January 12, 2015. You're looking at a daily chart of the SPY. And today was an interesting day. We started to sell hard in the morning, and then we clawed our way back in the afternoon. And if you remember last week I gave the video on Sunday, but it was really for Friday's close. And I said that this week is options expiration week. So what you're seeing today, or what you saw today, you're going to see more of this week. You're going to see a lot of whipsaw action. You're going to see a lot of market fake outs. Market went down hard in the beginning of the day. In fact, let's take a look at an intraday chart real quick. Okay, look what happens here. Market goes down hard in the beginning of the day, and then it kind of chops around all day, maybe puts on a little buy program at the end of the day. What you're seeing is you're seeing options expiration game playing by the large players with all the money that they can slosh around in the markets. So what I suggest is you be careful trading the markets this week. So for example, my indication based on today's close and a couple of other things which I'll talk about in a minute is that tomorrow you could see, I don't know if you're going to see an up day all day, but you're going to see higher prices tomorrow. You're going to see I'm going to talk about the E-mini because that's where I do the work on for my intraday analysis. And I'll just give you the benefit of that now, and we can translate that to the SPY or the S&P in a minute. So my work on the E-mini tells me the E-mini right now is at 2022.75, and that's in the aftermarket. That's in the Globex session. I see the E-mini tomorrow at a minimum reaching 2031, okay, 2031. And then I also see at least into Wednesday, I would suggest that we'll see 2040. Okay, that's not to say we won't see downside in between. So if you just translate that to the SPY, figure on about 7 points higher in the SPY, or not 7 points in the SPY, but 70 cents, which is 7 points in the S&P, okay, or translated to the S&P, figure it closed at 2028, figure 2035, and then possibly into Wednesday 2045, maybe even reaching 2050. Okay, that's not to say we won't see some downward momentum as well, but I see those numbers being hit between tomorrow and Wednesday. But you can see a lot of up and down action in between because it's options expiration week. Let me show you one of the reasons why I'm fairly convinced we're going to see higher prices tomorrow, for example, okay? Let's go to my favorite market indicator, okay? This indicator, the IWM, hardly ever fails, okay? It's the small cap index, small business across America, all right? And what happened today in the IWM is we had, I'm just going to my other platform here. Yeah, the IWM basically was down 0.23% today, okay, and the S&P was down 0.8%, almost 1%. The IWM was stronger today than the S&P, and whenever we see something like that, either that or on the flip side where the IWM is significantly weaker than the S&P, it's usually a tell of what's to come. Well, that tells me, along with some other work that I've done, that higher prices are ahead either for tomorrow and or Wednesday, okay? So that's basically my take on it. But keep in mind it's options expiration week. And also keep in mind we just got into earnings season. The first company to announce earnings is always Alcoa. They announced earnings. They beat on their whatever. They beat on their revenue number. They beat on their earnings number. It doesn't really matter what the numbers were. It just matters how the market reacts to the numbers. And we'll see what happens tomorrow. After hours, Alcoa was up. We'll see what happens tomorrow. The point is, Alcoa is unimportant. The point is we're getting into earnings season. So now it's going to be either companies are beating expectations or they're missing expectations, and that's going to be catalyst to move the market one way or the other. So it's something definitely to be aware of. Let's see what else I have in my notes here. I think that's about it in the S&P. So just something to be aware of. I see upside over the next day or so. So just be aware of it. I would say that if folks are short, you're going to see some short covering to drive the market higher. We'll find out what happens tomorrow. We'll see if I'm right, and we'll take it from there. So let's go over to the gold market, okay? The gold market. Oh, by the way, before I do that, I want to go back to the S&P for a second because I want to give you downside targets just in case. Here, let me get rid of this chart. I want to give you downside targets for the S&P, okay? I mentioned these before, but I just don't want to leave them out. So let's say the market does sell, all right? Where are the downside targets? Well, right now you have a low, a higher low, and we'll see what happens here. But if we should take out this low here, which is 198.85, okay, if we take this low out, you may stall out at the 200, but I'm not sure that's going to hold at that point. And if you see heavy selling or if you see selling on heavy volume, you're going to look for this gap window here, which is 191.48, and then this gap fill, which is 190.45. So we would say in this area would be the next target. And if we did get down to this area, this would most likely present a pretty good buying opportunity. I don't know that we get there, but if we do break this pivot here and this pivot here, I don't think the 200 period moving average will hold. And then your next area would be this gap window and this gap fill here. So just keep that in mind. I know I've mentioned that before, but it's worth mentioning again. Okay. Let's go over to the gold market, and gold is doing exactly what we said it would do. It's powering higher. Now you've gotten just about to that first target area I mentioned at about 119. Okay, the spot gold market right now is at 1237, and this is in the Globex session. It's up about $4.50 in the Globex session. And remember what I told you. I told you I was looking for a target of 1240 to 1245 or higher. Okay, now we've already gotten today to 1242, and that's in the aftermarket session. Okay, so we've really achieved that goal. But I do think, remember the second half of what I said, or higher. So I do think that there are higher prices ahead. In fact, if we take this pivot out with any significant volume, okay, then we're going to take a run at this 200 period moving average and on up from there. And it's not going to all happen in one day, and I'll keep you in the loop of what's going on day by day. But so far in the Globex session, we hit 1242. So remember, it was probably at least a week ago that I said we were going to hit 1240 to 1245 or higher. We're here now, so let's see how the market reacts to those numbers, and we'll take it from there. Now, gold is volatile, so you will see some pullbacks along the way. Look at all this choppy action, and I remember I was telling you, accumulate here, and those that did were rewarded, okay? So I still think there's higher prices ahead in 2015, but you're going to see pullbacks along the way. You're going to see your down $20 and $30 down days, but you're also going to see $20 and $30 up days in gold. So here we are, just as I mentioned, 1242 is the high so far in the after hours session. So remember, 1240, 1245 was my initial target or higher. Okay, so here we are. All right, good. I like that. Let's go over to the oil market. We'll just punch in USO, but there's not much to talk about again. Nothing has changed, okay? Crude oil right now is at 45.39. That's in the aftermarket session. That's on the February crude oil contract. Now, remember I said if we broke 50, my number was 48, and even weeks ago I said 48 was the number. Also when it was trading at 58, 59, 57, I said 48 was the number, not 50. Everybody was calling for the round number of 50. I told you 48. We hovered at 48 for a while, and that coincides with this area here. And then we broke down. Now we're at 45.5, basically. And I think that 42.5 to 43.5 may mark the low, but until we see a definitive low put in oil, which means you have to see that capitulation throw up, you have to see a reversal day in order to start playing anything in the energy sector, okay, whether it be oil or any of the big integrated oil companies, any of the E&Ps, any of the refiners, anything like that. You've got to see a definitive low in oil to start playing the oil complex, and we don't see it. And what does that mean? You've got to see basically a throw up down. You've got to see reversal intraday, high volume, and you've got to finish near the high. That's basically what I'm looking for. Until I see some kind of reversal that looks like that, there's nothing to do. And remember, prices can always go a lot higher than we think and a lot lower than we think. Okay, there are oversold and overbought conditions. I agree with that. However, things can get way, way oversold, more so than people think, and vice versa on the upside. So right now, we're in one of those scenarios where I know that a lot of folks are saying oil's oversold, 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 but you know what? Who's to say it can't continue down? Nobody. It is continuing down. It's going a lot lower than many, many people have thought it ever would, okay? When it was in the 70s, 60 was going to be the bottom. When it was in the high 50s, 50 was going to be the bottom. And now it's at 45. So until we see a definitive bottom, stay away. Don't try and pick the bottom. Don't catch the falling knife. It's a fool's game. Wait for the reversal. I'll tell you when the reversal happens. I'm going to tell you right here. Okay, you don't have to catch the absolute low, because when the reversal happens, there are so many shorts in oil that they're going to start covering, and it's going to send oil up $7, $8, $9, $10 in a flash. You don't have to catch the bottom. You're going to catch plenty of the move. I would rather catch less of the move than try and catch a falling knife and get stabbed, okay? So we'll leave it at that. The last thing we'll talk about tonight is bonds and interest rates again, okay? So let's go to the TLT, and as you can see, the TLT continues to power higher. Interest rates continue to power lower. In fact, let me swap right over to interest rate. I'm going to go to the 10-year interest rate, and look where we are, okay? The 10-year interest rate is at 191. Now, this is telling you that something's going on. If everybody believed that the Federal Reserve was going to raise rates, wouldn't interest rates be moving higher instead of lower? Okay, they're moving lower for any number of reasons, but in my book, they're moving lower for probably two reasons. They're moving lower because money's coming out of the stock market and going into the bond market, which drives rates lower, okay? And or the folks that are smart, that play the bond market, okay, are buying bonds. Why? Because they don't believe the Fed has the nuts to raise interest rates, okay? And that's where I am. I'm in that camp. I don't think they have it in their goal to raise interest rates this year. I just don't think they're going to do it. Even though most people think they're going to do it in whether it's April or June or who knows when, I don't think they got the nuts to do it. So we'll see what happens. But the fact that rates are moving lower and bond prices are moving higher tells me they're not going to do it. And it also tells me there could be further downside in the stock market, and the bond market may be giving us a signal. Okay, so that's something else to be aware of. I want to give two more things tonight, and I think it's worth it. Let's take a look at Google, okay? Google's a market leader, all right? Now, what happens with market leaders? Market leaders tell you what's going to happen, okay? Look what's happening to Google. Nobody's talking about this. Google is melting away. You have a high, lower high, lower high, lower high, lower high. Google's melting away, and it's concerning to me, and anybody long Google is feeling some pain right now, okay? So look where it's going. All right, so we've gotten to this no man's land. See this big green up bar here? This is from October of 2013. This is a weekly chart. All right, if this doesn't hold here, we could find ourselves down at 463, 450 in Google, and that'll have a world of pain for those longs in Google. And there's a lot of funds and pension funds and hedge funds in Google. Okay, so just need to be aware that Google's a market leader and it's melting away. It's melting away because there are sellers in Google, okay? This is distribution in Google. This is the big guys selling Google. It's just that simple. Let's look at one more, okay? A market favorite, Apple, all right? Now, Apple was strong for a long time. I want to go back to the daily chart on Apple. Strong for a long time, and then all of a sudden, high, lower high, lower high, and now you've made another lower high, okay? Now, where would we go in Apple if we go down, all right? Well, this pivot here should hold, okay? The 104 to 106 area, that's going to be a lot of support. You see this pivot here? This is about 106. that should hold. But if it doesn't, okay, you could find Apple down here at 103. You could find it to this gap window right here at 101 and change, and you can find it filling this gap at, let's call it 100 for an even number, and it's close enough to the 200 period moving average down here at 97. So again, so many people, so many hedge funds, mutual funds, money managers hold Apple that if Apple starts distributing, if they just start distributing Apple, the good news, bad news is, the good news is a lot of folks own Apple, but the bad news is so many folks own Apple that if they start to sell, it becomes a self-fulfilling prophecy, and the selling could get fast and furious. So you need to be careful if you're holding Apple. So those are some things I thought were worth mentioning. I hope it's helpful. Okay, I'm going to wrap it here. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.